All right, let's get to our first topic of discussion this afternoon. Now, Africa's largest economy, that is Nigeria, is facing significant economic challenges that threaten its stability and growth. Despite being rich in natural resources, including oil and gas, minerals, the country's economy is challenged at the moment with providing for its citizens. Nigeria's economy has been heavily reliant on oil exports for decades. However, this over-reliance on oil has made the country vulnerable to fluctuations in global oil prices. When oil prices drop, Nigeria's currency and economy suffers. An economist, Dr. Yemi Kale, once said, and I quote, "The oil price crash in 2024 was a wake-up call for Nigeria. It showed that the economy is too dependent on oil and that there is a need to diversify." That's end of quote. Corruption and inefficient leadership before now, according to others, has also hindered Nigeria's economic growth. Corruption has led to mismanagement of public funds, while inefficient leadership has resulted in poor economic policies. President Bola Tinubu has decided to take the bull by the horn with his bold reforms, which have generated comments from all and sundry. Let's start the week with Mr. Tajuddin Ibrahim. He's the Director of Research and Strategy at Chapel Hill, Denham. He joins me to look at some topical issues around the world of business this Monday afternoon. Thank you so much, Mr. Ibrahim. It's good to have you on the show.
Thank you so much for having me on the show today.
I think it's interesting to start from what we've seen with the level of our currency. We saw the Naira recovering over the weekend, and as at today, I even confirmed from the other market, it's about 1,550, 1,560, and I think in the other market it's about 1,500. I want you to tell us what you think would be responsible for this. As some say, the initiative introduced by the central bank. Some are also saying is the issuance of Eurobond by the DMO. What is your sense of understanding this development?
Well, I reckon that there are two key elements, and you have mentioned, those two key drivers of the appreciation that we are seeing on the exchange rates. The first of them is what the CBN did in terms of the trading platform by adopting what we call BMatch, provided by Bloomberg as a terminal for trading FX. So, which means that traders can get on that platform and make quotes around what they want to sell or what they want to buy in terms of the volume, and the volume will be matched by a willing buyer and or a willing seller. So that is what we have seen on that end in terms of the trading platform. And what we have also noticed on the trading platform is that the supply of foreign currencies to the market via that platform is a lot more compared to the demand that is going through or coming to the market. So that resulted in the appreciation of the currency. If we now take a look at what the government in itself has done within the past 1 week, what we notice is that the government was in the market and raised about $2.2 billion via Eurobonds. So what that implies also is that the FX reserves will see an accretion. It is going to increase, and at the same time, it will embolden the central bank, in terms of its ability to supply FX to the market. Importantly, I think I have to also mention this. The central bank governor at some point had said that the supply of FX to the market has been much higher compared to last year, compared to the beginning of this year, but it is because of the activities of middlemen in the market that we have not seen the Naira appreciate. So we now have a case where middlemen, largely speaking, have been eliminated via the introduction of BMatch, which is a new platform to trade the currency. So I think, largely speaking, those are the drivers of the appreciation we have seen so far.
So while some of this seems to be recurrent, if we follow the way even the inflows from diaspora remittances and all of that are coming in at this time, many will still say that, do you think that all of this is sustainable where many would say we need to look away and do more to sustain our currency?
I think sustainability is a function of a lot of factors, and I reckon that one of such factors is continued inflows, from various sources. I have just briefly discussed the $2.2 billion US dollar inflow via Eurobond issuance. We also need the inflows that we get from our exports to be elevated, particularly inflows from oil sale, and also inflows from other non-oil items. All of those elements have to increase significantly. The third element to my mind that has to materialize is also inflows from IMTOs, inflows via diaspora remittances. All of those have to be coming in steadily over the next couple of quarters. The final element I would like to touch on is what happens in terms of savings by substituting our imports to ensure that we can backwardly integrate and depend more on local products instead of importing. And I reckon that we are going to see a lot of that in 2026. In 2025, because we have a situation where our local refineries are working as we speak, and the outlook for more of those refineries to begin to work is promising. So I reckon that about $7 billion, can be saved also via the introduction of Naira for crude policy by the federal government. So all of these elements, when we bring them together, they are positive for the outlook in terms of inflows. The final element I think I should not forget is the foreign portfolio investment. Next year will also most likely be a year, that we will see more FPIs come into the country, largely because of the reforms by the government, largely also because we have, cheap valuation of investment securities in the capital market, and also largely because of stable FX rates, which I think has started to materialize. Those are my expectations around FX going forward.
Let's shift to talk about inflation, which many would say naturally could pick up as we move to the year end, buying and all of that. Many expecting a lot to happen, high prices and all of that. That is at the moment in the country. So how would you put this side by side with states that are already approving the new minimum wage and all of that? Do you think there will be a sort of balance moving forward?
For a balance to be achieved, going forward, it is very important for the Nigerian government to address the rising inflation. And I reckon that, the key element for them to address is food inflation, because food inflation, to my mind, is not something that the monetary authority will be able to fight successfully. So I reckon that, it sits largely speaking with the fiscal authority in this case. And if you are looking at Nigeria on a standalone basis, maybe one will not really appreciate, what is happening, or one will not be able to evaluate, completely what is happening, to us on the inflation side. Let's take a look at the BRICS country. Those countries, talking about Brazil, Russia, India, China, and also South Africa. Those countries have an inflation average of about 6%. This is speaking about food inflation. And Nigeria has 39 percent plus food inflation, which means that being part of the BRICS country just as a partner, not as a full member, means that we really need to do something to our inflation rate if we really want a cohort of countries like that to admit us, fully into that space, for us to benefit from the trade and investment flows opportunity that will come from all of those areas. So if you are looking at minimum wage and the high inflation, I reckon that consumer spending power continues to diminish, and 2 or 3 key are factors that can make that spending power to improve is that we have lower inflation, we have lower exchange rates, and also possibly we have much higher level of income for consumers. That is when we can be talking about the ability of consumers to spend being strengthening further, or the ability for them to spend rising going forward. But if all of those do not materialize, I think consumers' pockets will remain depressed by elevated inflation, in my view.
And that will be a serious one. Now, before now, we've many times talked about the handshake between the fiscal and the monetary side, and we can't talk about this enough because it is very important. But right now, we see the fiscal side coming up with some suggestions, and that takes me to the tax bill before the National Assembly that is generating lots of concerns here and there. I think I should start by asking that to you, what is your reaction to this, and what do you think should be done to address all of these fallouts?
I think the tax reforms, that are currently sitting with the National Assembly should be passed, by the National Assembly, and then they become laws of the country. If we look at those reforms, what those reforms look to address, largely speaking, is the inefficiency in our tax system. And any type of reform that will address inefficiency should be passed very quickly, so that Nigerians will begin to feel the positive impact. I reckon that we most likely are going to see the positive side of those reforms, as the cost of doing business most likely is going to go down for some sectors of the economy. And I think those sectors I'm talking about are sectors that are considered critical sectors to the economy, because they most likely are going to be paying much lower tax compared to what they currently pay. So that is what I believe Nigerians should look at, consider the overall benefits of those reforms as they speak to efficiency, making the current system to be a lot more efficient, making also the current system to be able to expand the tax net, so that tax revenue for the government will be elevated from the current level. Let me speak further to address some of the concerns, because when we have higher tax revenue, what it implies is that the deficit in the budget will be somewhat lower. And when that deficit in the budget is lower, what it implies is that we are going to see the government relying less on borrowing. When government relies less on borrowing, we are going to see interest rates either coming down or stabilizing, because the government will not be supplying too much debt to the capital market. All of these elements, in my mind, have positive impact that Nigerians will see when the tax reforms are, the tax bills are passed into law by the National Assembly, and it suggests to me like a positive outlook in 2025.
Let's take it from that positive outlook. Now, considering all of this that we've identified, moving on, food inflation seems to be that big elephant in the room. But moving forward, what is your take with regards to what we should expect moving into 2025 around Nigeria's economy? And of course, the revival. Many expect a rejig, they expect a lot from government moving on. What sort of interventions are you thinking around in 2025 that will be different from what we used to have?
I think one thing that the government has to do differently is transparency. To my mind, transparency is very important, because if you are not transparent as a government, you easily will lose public confidence. And when public confidence is lost, it can lead to unrest. And when there's an unrest, all of the dividends that we have seen around all of those economic reforms can easily be erased by any form of unrest in the country. I think the government should focus on that going into next year. I think Nigeria can expect currency stability, next year, given the commendable handshake between the monetary authority and the fiscal authority in addressing the challenges that we have around our currency. So my sense is that we should, see stability of the exchange rate next year. And I reckon that for stability to be sustained also, it is important that, the authorities do not allow speculators to take advantage of any weakness in the architecture of the FX market. I think that is very important. I think we most likely are going to see, somewhat, higher economic growth because of the reforms that the government have, put in place, so far. The third quarter GDP, numbers are already indicative of a much stronger economic growth. The final thing I would like to touch on that Nigeria can expect is the rebasing of our inflation as well as our GDP. I think those two indicators, will post remarkable numbers next year, and I reckon Nigerians should watch out on those fronts.
I said we also had a trade surplus. I saw that report sometime this morning. I don't know if you would like to react to that and the fact that...
Absolutely.
Yeah, go ahead.
Absolutely. We have a trade surplus, and that trade surplus has been in place for the past 8 quarters. So when you have a trade surplus as a country and your currency is still, somewhat weak or is still volatile, then it means that there are other indicators, not necessarily, fundamental issues that are wrong, with what we are seeing with our currency. And that is the reason that I like the intervention of the CBN by bringing in a new platform, to trade the currency and remove the impact of, speculators and middlemen in that regard. So trade surplus, being recorded by Nigeria is a positive thing, and I reckon that it can be sustained if our oil output remains elevated. No doubt, we have not met the OPEC quota. I reckon that that can be the headroom in terms of what we can target for next year. But for that to materialize, there's a need for an improvement in security in oil producing states, in security of the oil installations, for us to achieve, that OPEC quota, in my view. So I reckon the outlook is positive also in terms of our trade balance for next year.
I must thank you so much, Director, Research and Strategy, Chapel Hill, Denham, Mr. Tajuddin Ibrahim. Thank you for starting the week with us on Business Nigeria. We appreciate this.